3 or 4 years. That's how long the CEO of one of the world's largest tech companies just told investors they have before they need to get, in his words, paranoid. Not about a competitor, not about a recession, about a machine that doesn't fully exist yet, one that could unravel the entire foundation of digital trust as we know it. If that sentence made your stomach drop a little, good, because it should have done the same thing to a lot of very smart people on Wall Street the moment it was said out loud. This wasn't a hedge fund manager talking his book. This wasn't a fringe blogger chasing clicks. This was the leader of a company with more than a century of technological credibility, a company that has quietly been one of the world's leading builders of quantum hardware for years, choosing the biggest financial stage in the country to say the quiet part out loud. And today, we're going to walk through exactly what was said, why it matters, what the science actually behind it looks like, and what it all means for the future of money, security, and technology as we know it. Let's set the scene. It's July 30th, 2026. Arvind Krishna, the chairman and CEO of IBM, sits down across from Jim Cramer on CNBC's Mad Money. This isn't some fringe podcast or a niche tech conference panel. This is one of the most watched financial programs in the country, hosted by a man who has spent decades interviewing CEOs, founders, and market movers. Cramer has heard thousands of corporate talking points in his career. He knows how to spot spin. He knows how to spot hype. He has watched CEOs dodge, deflect, and dress up bad news as good news more times than he could probably count, and audiences trust him precisely because he tends to call that out when he sees it. So when a guest gives him a straight, specific, uncomfortable answer instead of the usual polished non-answer, it tends to stand out, both to him and to the millions of people watching at home. And on this particular afternoon, he asked Krishna a question that seemed almost casual at first. Could quantum computers eventually break the cryptography that protects Bitcoin? It's the kind of question that gets asked a lot in tech circles, usually followed by a vague, reassuring answer. Something like, "We're years away, don't worry about it, the technology isn't there yet." That's the script most executives follow. It's safe, it doesn't spook anyone, it doesn't make headlines, but Krishna didn't follow that script. Instead, he gave Cramer a number, a real number. He said, "This is important. I think that you should give yourself 3 or 4 years, and at that point I would get rather paranoid about it." Read that again. The head of IBM, a company that has been building and researching quantum computers for decades, a company that arguably knows more about the real-world state of this technology than almost anyone else on the planet, didn't say never. He didn't say decades. He said 3 to 4 years, and then he used the word paranoid. Not cautious, not aware. Paranoid. That's not corporate language. That's the language of someone who has looked at internal roadmaps, internal benchmarks, and internal timelines, and decided that the public deserves a direct answer instead of a diplomatic one. Cramer's reaction told you everything you needed to know about how seriously that answer landed. He didn't move on to the next question right away. He paused. He repeated it back. 3 or 4 years? That's not that long. And he was right. In the world of technology, 3 or 4 years is nothing. It's barely enough time to fully roll out a new iPhone generation, let alone rebuild the cryptographic backbone of the entire global financial system. Cramer, a man who has interviewed everyone from tech founders to central bankers, walked away from that conversation rattled enough that 4 days later, on air, he told his audience he was planning to sell his Bitcoin. Now, let's be clear about something. As of the time of this recording, there's no public confirmation that Cramer actually followed through and sold. Talk is one thing, action is another, and plenty of market commentators have pointed out that betting against Cramer's predictions has become something of a running joke among traders, an inside joke sometimes called the inverse Cramer effect. But here's the thing. The joke isn't really about quantum computing. Nobody on social media was seriously debating whether Shor's algorithm could break elliptic curve cryptography. They were mostly reacting to Cramer, the personality, not to Krishna, the source. And that's actually a little bit concerning, because it means the substance of what Krishna said got buried under the meme when it probably deserved a lot more serious attention than it got. So let's give it that attention. Let's actually break down why a quantum computer would even be a threat to something like Bitcoin in the first place. Because this isn't science fiction hand-waving. There's real mathematics behind this concern, and understanding it changes how you think about digital security altogether. Bitcoin, like most modern digital systems, relies on a form of cryptography called the elliptic curve digital signature algorithm, or ECDSA for short. In plain terms, every Bitcoin wallet has 2 keys. A public key, which is essentially your address, visible to anyone, and a private key, which is the secret number that proves ownership and lets you spend your coins. The entire system works because, with today's computers, it is essentially impossible to work backward from the public key to the private key. You'd need more computing power than exists on Earth, running for longer than the universe has existed, to brute force that calculation using classical machines. That one-way mathematical wall is what makes your Bitcoin yours and nobody else's. It's also the same basic principle underpinning far more than just cryptocurrency. Similar forms of public key cryptography secure your online banking sessions, the messages you send through encrypted apps, the digital signatures that verify software updates on your phone, and even the systems governments use to protect classified communications. Bitcoin just happens to be the most visible, most talked about example because its entire value proposition is built so explicitly and so publicly around the promise that this mathematical wall cannot be climbed. Quantum computers threaten to knock that wall down, at least in theory, through something called Shor's algorithm. Without getting lost in the physics, Shor's algorithm is a method that, if run on a sufficiently powerful and stable quantum computer, could take a public key and derive its matching private key in a fraction of the time a classical computer would need. We're talking about turning a problem that would take longer than the age of the universe into a problem that could potentially be solved in hours, or even less, once the hardware catches up to the theory. And here's the part that should really make you sit up. Researchers across the field broadly agree that this threat is real in principle. This isn't some contrarian internet theory. It's a well-understood mathematical vulnerability that the entire cryptographic community has been openly discussing for years. The debate has never really been about whether it's possible. The debate has always been about when. Peter Shor first published the theoretical framework for this algorithm back in the mid-1990s, decades before anyone had built a quantum computer capable of running it at any meaningful scale. For most of those decades, it lived almost entirely in the realm of theory, an interesting mathematical curiosity that cryptographers acknowledged but didn't lose sleep over because the hardware needed to actually execute it against real-world encryption was so far off, it barely felt worth worrying about. What's changed in just the last few years is that the hardware side of that equation has started closing the gap far faster than many expected. And that shift is exactly what's forcing this conversation out of academic journals and onto primetime television. Which brings us back to Krishna's comment and why it mattered so much. He wasn't inventing a new fear. He was putting a specific, concrete timeline on a fear that cryptographers and security researchers have quietly been building contingency plans for over the past decade. When the head of IBM says 3 to 4 years, he's not speaking as an outside commentator. He's speaking from the inside, from a company that is literally one of the furthest along in building the very machines that could make this threat real. IBM has been publicly showing off working quantum processors for years now, steadily climbing the qubit count, refining error correction, and publishing an annual roadmap that outsiders have generally treated as one of the more credible timelines in an industry that has often been prone to overpromising. That track record matters here, because it's precisely why Krishna's comment carries more weight than it would coming from almost any other executive in tech. He isn't a newcomer trying to generate buzz around an unproven idea. He's the steward of a multi-decade quantum research program, putting his own credibility behind a very specific number. And that's where the second half of this story gets even more interesting, because Krishna's paranoid comment didn't happen in a vacuum. It happened in the same conversation on the same day, where he made two other massive claims about IBM's quantum future, claims that reframe the paranoid warning as something much bigger than a scary soundbite. The first claim, Krishna said that quantum computing should begin having what he called a measurable impact on IBM's top line and bottom line by 2028 or 2029. Think about what that actually means. He's not talking about a research milestone or a lab demonstration anymore. He's talking about revenue. He's talking about earnings. He's putting a real business timeline on a technology that most of Wall Street still treats as decades away, if not pure science fiction. That's an extraordinary statement for the CEO of a public company to make on live television because it's the kind of claim that analysts will hold him to, quarter after quarter, for years to come. The second claim was even bigger. Krishna said that by the end of the 2030s, IBM is now, in his words, pretty convinced that quantum computing represents $1 trillion of value. $1 trillion. Not a market that could be worth $1 trillion someday, decades in the future, in some best-case scenario. $1 trillion of value that IBM's own leadership is confident enough about to state on national television. When you put those two numbers together, a measurable financial impact within 2 to 3 years, and $1 trillion valuation within roughly a decade and a half, you start to understand why Krishna wasn't hedging when Kramer asked him about the crypto threat. This wasn't a man speculating about a distant hypothetical. This was a man speaking with the confidence of someone who has seen internal data most of us haven't. Think about how rarely a Fortune 500 CEO attaches a specific dollar figure, let alone a figure as staggering as $1 trillion, to a technology that hasn't even fully shipped yet. Executives are typically trained by their legal and communications teams to avoid exactly this kind of forward-looking statement, because it creates expectations that can come back to haunt them if the timeline slips. The fact that Krishna was willing to say it anyway on live television, with analysts and shareholders listening in real time, tells you something about how confident IBM's internal projections must actually be. Now, context matters here, and it's worth understanding why Krishna was even in a position to be making such bold claims in the first place. This interview didn't happen during some random quiet news week. It happened shortly after a brutal stretch for IBM's stock. Just weeks earlier, on July 14th, IBM shares had dropped 25% in a single day, the worst single-day decline in the company's history. That earnings report had revealed that some enterprise customers were delaying capital spending projects, which raised uncomfortable questions on Wall Street about near-term demand for IBM's core software business, and whether the broader artificial intelligence spending boom might actually be crowding out investment in other technology categories, including IBM's own offerings. By the time Krishna sat down with Kramer, the stock had only recovered a couple of percentage points from that crash. Analysts across Wall Street had spent the days following that plunge, picking apart IBM's software numbers, questioning whether the artificial intelligence spending boom sweeping across corporate America was quietly starving other parts of the technology budget, including the very software and consulting services IBM depends on. Headlines called it a warning sign. Some even called it evidence of a broader AI spending trap, where companies were pouring so much money into generative AI infrastructure that other technology investments, quantum computing potentially included, were getting squeezed. In other words, Krishna wasn't speaking from a position of comfortable strength. He was speaking to investors who were nervous, who had just watched their holdings take a historic hit, and who needed a reason to believe in IBM's long-term story again. That context actually makes his quantum comments more compelling, not less. He addressed the earnings concerns directly, explaining that many of those delayed deals weren't cancellations, they were deferrals, pointing out that roughly 40% of the postponed contracts had already closed within just 3 to 4 weeks of the announcement, which he framed as a strong signal that customers were still committed, just on a slightly different timeline. But then, rather than simply playing defense on the earnings issue, Krishna pivoted to offense, using quantum computing as the centerpiece of his case for why IBM remains a company worth betting on for the long haul. And it wasn't just talk. The timing of this interview lines up almost perfectly with a genuine technical milestone. On that very same day, July 30th, IBM and researchers from the University of Chicago announced they had demonstrated what's being called verified quantum advantage. And the word verified is doing a lot of heavy lifting in that sentence. In previous quantum computing milestones, researchers could claim their machine had outperformed a classical computer. But proving that the answer the quantum machine produced was actually correct was often difficult or impossible to independently confirm. This new demonstration was different. Using 70 logical qubits and a new error correction method, the IBM and University of Chicago team ran a computation in about 15 minutes that classical computers simply cannot feasibly reproduce. And critically, they were able to prove that the answer the quantum computer produced was correct. That distinction between a quantum computer doing something impressive and a quantum computer doing something impressive that we can actually trust is enormous. It's the difference between a magic trick and a mathematical proof. For years, critics of quantum computing hype pointed out, fairly, that a lot of so-called quantum advantage claims were essentially unverifiable, meaning outside observers had to take the researchers' word for it that the quantum machine had actually beaten a classical computer at something meaningful. Verified quantum advantage closes that loophole entirely. It means independent parties can check the work and confirm the result is real, not just impressive sounding. And it's exactly the kind of breakthrough that would give a CEO the confidence to put a 3 to 4 year number on a threat that used to be discussed only in vague, distant terms, because it suggests the underlying error correction techniques needed to eventually run something as demanding as Shor's algorithm are advancing faster and more reliably than outsiders may have assumed. Krishna also mentioned something else in that same conversation that's easy to overlook amid all the crypto and stock market drama, but which speaks to just how broad the potential impact of this technology could be. He said IBM's quantum computers have already uncovered behaviors and materials that researchers were previously unable to observe using conventional computing methods at all. He suggested these insights could eventually lead to breakthroughs in battery technology, in the development of new advanced materials, in fusion energy research, and even in the discovery of smarter, more targeted medicines. In other words, the crypto-breaking capability that has crypto investors worried is really just one narrow slice of what this technology could eventually touch. The same raw computational power that threatens to unravel Bitcoin's security model is also the power that could help scientists design better batteries or discover new drugs faster than ever before. It's a double-edged sword, and both edges are sharp. Of course, IBM isn't operating in a vacuum here either. This is a race, and there are serious competitors sprinting alongside them. Alphabet, the parent company of Google, has its own substantial quantum computing division and has made headlines in recent years with its own advantage claims. Rigetti Computing, a smaller but focused player in the space, is also pushing hard to commercialize quantum hardware. This competitive pressure matters for two reasons. First, it means IBM has every incentive to keep pushing the timeline forward as fast as possible, because being first to a commercially viable quantum computer isn't just a bragging right, it's potentially a $1 trillion prize, in Krishna's own words. Second, it means that even if you're skeptical of IBM specifically, the broader trend across multiple well-funded, serious organizations is pointing in the same direction. Real progress, happening faster than most casual observers realize. Now, it would be irresponsible to walk through all of this without also giving weight to the skeptics, because there are smart, credentialed people out there who think this timeline talk is overblown. Quantum computing has a long history of promised breakthroughs that took far longer to materialize than early predictions suggested. Error rates remain a significant engineering challenge. Building a quantum computer that is not just powerful, but also stable enough and equipped with strong enough error correction to actually run something like Shor's algorithm against real-world encryption keys is a genuinely massive undertaking. Some experts argue that the gap between today's most advanced quantum machines and a machine capable of breaking real-world cryptographic keys is still enormous, possibly much larger than 3 or 4 years. Financial analysts covering IBM have echoed similar caution, noting that ambitious CEO timelines don't always translate into delivered products on schedule, and that quantum computing specifically has slipped its own projected timelines multiple times over the past 2 decades. Go back and look at industry predictions from 10 or 15 years ago, and you'll find plenty of confident forecasts about commercially useful quantum computers arriving by dates that came and went without much fanfare. Skeptics are right to point out that pattern, and they're right to demand more than a single television interview before treating a 3 to 4 year window as settled fact. Extraordinary claims, as the saying goes, deserve extraordinary evidence. And one CEO's confident answer on a financial talk show, however credible that CEO might be, isn't quite the same thing as a peer-reviewed, independently replicated timeline. But here's why that skepticism, while fair, doesn't actually make this story less important. Even if Krishna's 3 to 4 year window turns out to be 5 years, or 7 years, or even 10 years, the direction of travel doesn't change. The mathematics of Shor's algorithm doesn't change. The vulnerability in systems like ECDSA doesn't change. What changes is only the calendar, not the outcome. And when the potential outcome is the ability to break the cryptographic backbone protecting trillions of dollars in digital assets, along with countless other systems that rely on similar forms of encryption, from banking infrastructure to government communications to healthcare records, waiting until the technology fully arrives before you start preparing isn't caution, it's negligence. Which is exactly why the cybersecurity and cryptography communities have already been working on this problem for years, quietly, in the background, largely outside the spotlight that Kramer and Krishna's conversation just threw onto it. It's called post-quantum cryptography, and it refers to new cryptographic methods specifically designed to remain secure even against an attacker armed with a powerful quantum computer. Government agencies, standards bodies, and major technology companies have already been developing, and in some cases, formally standardizing these new encryption methods, precisely because everyone in the field has understood for years that a countdown clock like the one Krishna just described publicly was always eventually going to start ticking down towards zero. The difference now is that the countdown isn't just a theoretical academic exercise buried in a research paper anymore. It's being discussed on primetime financial television by the CEO of one of the most important technology companies on the planet. Standards, organizations have already finalized new encryption algorithms built specifically to resist quantum attacks, and major technology companies have begun testing and rolling out support for these standards across browsers, cloud platforms, and communication tools. Some large financial institutions have started internal audits, mapping out where their systems still rely on the older quantum vulnerable encryption and how long a full migration might realistically take. The honest answer, in many cases, is years, because you're not updating one piece of software. You're touching layers of legacy infrastructure never designed with this threat in mind. That's precisely why a 3 to 4 year countdown, even if conservative or generous by a year in either direction, is not a comfortable amount of lead time for organizations that haven't already started preparing. So what does all of this actually mean for you, whether you're an investor, a crypto holder, or just someone trying to understand where technology is heading? It means the conversation around quantum computing has fundamentally shifted. This is no longer a topic confined to physics departments and specialized tech conferences. It has entered the mainstream financial conversation, sitting right alongside interest rates, earnings reports, and geopolitical risk as something serious market participants are being asked to think about. When the CEO of IBM uses a word as loaded as paranoid on national television, in the same breath as trillion-dollar valuation projections and concrete earnings timelines, that's not noise. That's signal, It's a signal that inside the walls of one of the most quantum advanced companies on Earth, the internal expectation is that this technology is moving from theoretical to practical faster than the public conversation has caught up to. It also means that the systems many of us take for granted, the ones protecting our digital money, our private communications, our sensitive data, are entering a genuine transition period. Not an overnight collapse, but a transition. The same way the world transitioned from one generation of security standards to the next before, except this time the stakes and the timeline both feel sharper. Organizations that manage cryptographic infrastructure, from major financial institutions to cryptocurrency projects themselves, are increasingly being pushed to at least begin planning migrations toward quantum-resistant systems, rather than assuming they have all the time in the world to figure it out later. And there's a broader lesson buried in this entire story that goes beyond quantum computing specifically. It's a reminder of how quickly the ground can shift beneath a technology, a market, or an assumption that felt permanent just a few years earlier. Bitcoin's underlying cryptography has felt like an unbreakable law of physics to an entire generation of investors. For over a decade, the assumption that ECDSA simply cannot be cracked has been baked into the value proposition of the entire crypto asset class. Krishna's comments didn't break that assumption today, but they put a very specific, very public number on when that assumption might start to become genuinely testable, and that alone was enough to rattle one of the most seasoned voices on financial television. Whether Krishna's 3 to 4 year timeline proves precisely accurate is almost beside the point. What matters is that one of the people with the deepest, most privileged view into the actual state of quantum computing technology just told the investing public, in plain, direct language, that the time for paranoia isn't some distant, comfortable someday. It's close enough now to put a number on, and in a world where technology has a habit of arriving faster than we expect and catching people off guard when it does, that kind of direct, specific warning from an industry insider is worth paying very close attention to. Because the next time you hear about a quantum computing breakthrough or a new milestone or a fresh headline out of IBM, Google, or any of the other players racing toward this trillion-dollar future, you'll understand exactly why it matters, and exactly why the countdown clock Arvind Krishna just described out loud on national television is one that none of us can afford to ignore.